Welcome. So in this video, we are going to talk about how a business can actually increase its net profit up to 84+%. It's not an exaggeration. This is just pure maths. So we're going to go right into it and talk about how a business can do this and achieve this. So most businesses are very reluctant to actually hike prices. Yeah, they don't want to do it and they hesitate. And normally they just react to their suppliers. So when their suppliers finally hike the price, eventually the business owner hikes the price and says, look, inflation, supplier costs, we need to hike price. That is the wrong way to do it. That is not how the apex predator businesses operate. And in this video, I'm going to teach you exactly how they do it. First of all, if your business cannot actually hike prices, you probably don't have a business. You likely have a minimum wage job pretending to be a business. So if that's your first problem, this won't apply to every single business. If you're simply operating on a low margin, business that has absolutely no pricing power, you need to consider that first of all. But if your business can actually hike prices and stay alive, this video is for you. First of all, talk about the Cantillon Effect. I can guarantee you your accountant will not teach you the strategies in this video. This is why it's so important to understand this. The Cantillon Effect. So when the central bank prints money, it doesn't go to everyone equally. It goes to whoever's first in the queue. So whoever's standing right in front of the printer gets the money first, and then it passes to whoever is at the back of the queue. That's the easiest way to simplify it. So we want to stand at the front of the queue. How do we do this? Well, we go into the central bank's website and we look at M2. So we look at the year-over-year inflation growth. Let's imagine it's 4% increase. So if it's a 4% increase, naturally your thinking is, well, we hike prices by 4% once a year. That is wrong. If you hike prices once a year like the typical civilian does, it's a shock to the customer. It's a supply shock. The customer won't react well to it. So what do the apex businesses do? They increase their prices every quarter. So they track the printer, and every quarter they will do a slight hike. It's much more digestible for the customer if it's like 1.5% price hike rather than just one big hike at the one time. So let's imagine inflation is 4%. So your natural thinking is, we'll hike prices by 4%. If you're able to hike prices 1% above inflation, you can add up to 24% to your bottom line. The math will shock you, but here is the math, right? I've got the spreadsheet right here. So let's go to it. Right, so really simple. Two businesses are identical. Two identical businesses, they both make $1,000. They both have a net margin of 5%. So the net profit's $50. Standard business operation. The civilian hikes prices by 4% to keep up with inflation. They simply react. They wait for their supplier, who's also a civilian, to hike prices, and they all tread water and they survive. The apex increases by 5%, so simply 1 extra percent. What happens to their net profit? Right there, 24%. So you're thinking, how is that possible? Well, in the normal world, 1 + 1 = 2. In corporate finance, 1 + 1 = 24. Yeah. I learned this from one of the best investors, which was Chris Hoyne, was talking about this on a podcast, because he was investing in Visa and MasterCard because he realized they can actually keep up above inflation. And then I started thinking, well, small business owners and business owners can do this as well if they have pricing power and if they're actually tracking the right metrics, because your accountant likely just tracks consumer price index and they look at the past. They're a historian. They are looking 12 months behind, tracking the books. They're not allocators, they are not investors, they are not understanding the business operation. They are just trying to save you on a tax bill. On this channel, we are ahead of the queue. We are watching what actually matters. So look right there. Two businesses there, $1,040, $1,050, but someone's net profits went up by 24%. See, the math is shocking, but it's about to get even more shocking. What is one of the biggest expenses businesses have? Yeah. Well, to take payments, you need Visa, you need Stripe, you need MasterCard. How much do they normally charge? They normally charge, what, 2.9%? So the civilian says, well, this is just the cost of doing business. Yeah, you just have to pay it. I mean, how else is the customer going to pay me? Yeah, so 2.9% sounds like a tip. It's not a tip. Take a rough guess before I pull up the spreadsheet, right? Guess how much they're taking of your net profit. Right? It's 60%. 60% is what they're taking. Yeah, so watch this. Okay, I've added some zeros on this, right? So it's $1 million. It's the exact same. Yeah, it's the exact same. $1 million, 5% net margin, 50,000 net income, right? Stripe fees are 2.9%. So the civilian business absorbs it, and their net profit's 21,000 versus the Apex, who saves that money, and they have a $49,000 net income, net profit. So what's important to talk about here? The smaller the net margin, obviously the higher the net income will be, right? So if you have higher net margins than this, it's not going to show 24%. It might be less than that, but the principle still applies. So people with higher net margins won't see the higher numbers on the net profit, right? That's important to know, but the principle still applies, and it's still important to hike above inflation. That's what's absolutely vitally important. Now, I know that different businesses cannot operate without Visa and Stripe fees, so we're going to cover that. We're going to cover that right now. So first of all, if you're a B2B, you'll probably have more pricing power. B2B have more pricing power than a B2C. That's just a fact. Depending on your industry, depending on the business. So what we don't want to do with B2B is just send an invoice and hope and pray and manifest that they pay it. Yeah, we just cross our fingers and say, hopefully they pay me. That's not how we operate. Direct debit, direct transfer, no questions asked. If the customer says, I want to pay with an Amex because I want to get air mileage, you just say no. You stand your ground, and you create. If the customer can't deal with a little bit of friction, you have to question, is this customer a customer that you even want? This is for B2B. Because look, if you are able to do, because usually it's like 20 cents, 20 pence if you are doing an automatic direct debit, so it's a lot cheaper. The point is you're aware of the 2.9%, so even if you have to, you pass it on to the customer. Because now you're seeing that brutal 60% net profit loss to fees, you start to say, okay, now I can't just ignore this, I need to address it. So the fact is, you now know what the challenge is. That's what's important. Okay, business to customer, right? Business to customer, you're facing the customer. Yeah, create friction, right? So you create friction. So you say, look, we'll charge an extra 3% for credit card. But if you pay by cash or debit card or alternative, you get a 3% discount. Yeah, civilians love discounts and they hate friction. So create a bit of friction, either pass it on or give them an alternate way to pay it. Yeah, but you've got to do something. You can't just let it be. The most difficult one for this is e-commerce. Yeah, because if you give them any friction, you'll lose a sale. Yeah, so you can't. You probably, if you're running meta ads and you're running advertisements, you've got this customer who's on their phone at 11:30 at night. You can't create friction. Yeah, so it's different for e-commerce, it's different for that style of business, but you can still add it onto the cost in one way or another. Yeah, because you can't get rid of Apple Pay because you'll lose a customer. Yeah, so I understand that. Yeah, B2C is more difficult, but the point is you cannot fight the consumer's laziness. Friction is the ultimate conversion killer. So we look at Apple Pay not as the enemy, but as a marketing expense for conversion, or try and add the cost in one way or another, passing it on to the customer. Okay, so most importantly, hiking prices every quarter above inflation if you need to. So if it's a one-time hike, because if you've not been even hiking your prices and you're just being a victim and you're doing it every 12 months and you just react to supply increases, then you are reactive and behind and you're a civilian operator. Or you continue to look at the year-over-year growth per quarter. The central bank updates M2 usually every quarter. It's every quarter it gets updated, right? So that's what we're looking at. We're going straight to the source, because if you just wait 12 months, because of the Cantillon Effect, yeah, which we've just established, you are just going to be a victim. Inflation's already taken place by the time you try and hike your prices, so you're already lost. You're already behind. Yeah, this was developed by Richard Cantillon, an Irish-French banker and economist. The people that actually benefit are the ones that are right in front of that money printer. So all the biggest companies in the world naturally benefit. So Visa is one that massively benefits, because this is one of the strongest operating companies. Visa and MasterCard are one of the strongest operating companies because of the fact they're a toll booth for all businesses. Yeah. So what happens if you combine price hikes with saving on Visa, MasterCard, Stripe payments? So what actually happens? Well, you get the grand slam. So I put it back to 1,000 revenue. So we've got two identical businesses with identical net margins. So take a guess. 84.32% net profit growth. See, the civilian brain short circuits when they see the math. So we have two businesses. One makes $1,040. One makes $1,050. But because the Apex business hikes above inflation and avoids paying the toll booth, rather than just being a survivor on a 4% profit growth, they've actually hiked it by 80% above the civilian business owner. So the math speaks for itself. The math just speaks for itself. So this actually a business owner can implement this the next quarter. If you're a business owner, your accountant will not teach you this. Yeah, your accountant is not programmed, or this is just outside their universe. They don't track monetary inflation. They track consumer price index. Plus, they just operate in the past. This is just outside of their element. But the math speaks for itself. Look at that, 84%. Just look at that. Screenshot it and check it for yourself. The math is right there. Because look, they're paying the payment fees. Yeah. They're paying the $30 payment fees, and this just obviously scales. I'm just using $1,000. It doesn't matter if it's $1,000 or $1 million or $10 million. The math is the same because it's a percentage. Yeah. So I learned this from the Chris Hoyne. Chris Hoyne, he's an investor, and one of his biggest holdings is Visa. And I was looking into it, and I thought, well, why does he like Visa so much? Well, obviously I know why, because they don't even need to hike above inflation. They just track it. They're immune to it because the business owners do the hiking for them, and they just take a payment. So I reversed it and said, well, what happens if a business owner does the same? So there you go. If this is helpful to you, just let me know. Yeah, leave a comment and tell me if this surprised you. Did you already know this is how much they were taking? Are you shocked by the figures? Because I want to know. Yeah. So there you go. I hope you found this helpful. But yes, if you're operating on a higher net margin, as I said earlier on, it's not going to be 24%. The smaller the net margin, the higher the nominal profit growth is. That's important to know. But it still applies with a higher net margin. It'll still be significant is the point. That is the point. The point is you're aware of it now if you weren't already. And this can benefit you.